Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of November 11, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week was not kind to Maryland mortgage rates. Rates moved higher after the bonds sold off when the October 2013 jobs report came out on Friday. If you look at the bond chart on your screen, you can see that giant red candle down on Friday. 93 basis points we lost after the jobs report came out in the morning. Broke through the 200-day moving average and just sold off. Mortgage rates did jump higher. So hopefully you took our advice to lock last week at the beginning of the week going into the jobs report. If you did not lock, you're still floating. We are going to recommend cautiously floating your Maryland mortgage rate to start the week. But on Tuesday when the market opens up, if the bond starts to sell off, we will quickly switch to a locking stance because it's got a pretty far way to fall, so rates could jump higher. Now, the big news on the October 2013 jobs report, we were expecting only 100,000 jobs created. We actually got 204,000 jobs created. Big surprise, rocked the bond market. And the big reason it rocked the bond market is because now they're thinking this may give the Feds reason to start tapering their asset purchase program in December versus waiting to March, which we think they were going to do. Now they could be coming out in December, so the bond market is definitely jittery over that. So if we dig into that October jobs report, what do we see? Well, the first thing we talked, 204,000 jobs created. We also saw the unemployment numbers. Unemployment ticked up from 7.2 to 7.3%. And then the labor force participation rate actually dropped from 63.2% down to a new 35-year low of 62.8%. The labor force participation rate measures how many people 16 years and older eligible to work are actually working. So that's not good news. We lost people working. So at the surface, the jobs report looked good. Bond market tanked on that. Rates jumped higher. But when we dig into it, not a stellar report. So we'll have to see what happens next month, and we'll have to see what the Feds are on their tapering program. If we look at the overall jobs report, we did see August and September also added 60,000 jobs to those numbers. So again, great jobs number coming out. We also saw gross GDP, gross domestic product, come out for the third quarter. That reading came out at 2.8%, up from 2.5% from the second quarter. Now, most of that number, though, the increase was from businesses buying inventory, not from actual sales, because if you look, consumer spending actually has been dropping. It dropped down to 1.5%. If you look at the chart on the screen, you can see GDP going up, but consumer spending going down. Now, the problem with that is consumer spending drives our economy. If consumers stop spending, our economy is going to stall. So the GDP is just from inventory buying, which they're probably done now. So we're going to see, unless consumer spending picks up, we're going to see the GDP continue to go back down. Now, in the news last Thursday, we saw the weekly initial jobless claims were released. That came out at 336,000 jobless claims, right about where we expected. Jobless claims, again, in the mid-threes. They broke below 300. We're in the high twos. That's where we need them to get back to. We need the jobless claims to go down. We need people to go back to work. So jobless claims, not a good report on the economy. But in the housing news, some good news there. CoreLogic's home price index for September 2013 showed a 12% price increase from September of 2012 to September 2013. That is above the 11.7% increase we saw from August 2012 to August 2013. So home prices continue to go up. September is the 19th consecutive month of home price appreciation. So housing market is doing well. Still a great time to buy a home. We do see home prices to continue to go up into 2014, probably into 2015. So it's a great time to buy. And in the local news, the next free first-time homebuyer seminar is in Towson, Maryland on Saturday, November 16th from 10 a.m. to noon at the Sheraton Baltimore North Hotel on Delaney Road. Now, you can register for that event by give us a call in the office at 410-412-3319 or register online at www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.